We are back with another gem for him to win, or her to win. I need to figure out an intro thingy for this channel. I have nothing. You know, my other channel got back with another banger. This channel I have back with another gem to win. That don't even rhyme, do it? Anyways, y'all read the title. Today I'm gonna be putting y'all to one of the best sources of passive income that I use right now. Now I'm saying it's dividend investing. So I'm about to give you guys a nice little breakdown, a calm, easy to understand breakdown. I don't want to get into big words and nothing like that, because I hate when I'm like on YouTube and I'm trying to figure out something and then I watch this video of like this old white guy, this old like Indian guy or something like that. He's using all these big words, and then I gotta go to dictionary.com and figure out what the heck this word means, and then they explain it with another big word and I gotta go to another. It's just a whole bunch of nonsense. I'm gonna explain it very simple so you can understand, no matter how old you are, no matter if you ever invested in any stocks or any dividends, or if you know what the word dividend even means. In simple terms, right? Dividend trading is basically when a company that is publicly shared, so let's say like Apple or something like that, they made an excess amount of money that quarter or that month or that year. They just made an excess amount of money and they're like, okay, we're kind of rich now, guys. Let's give back to our shareholders. You feel me? They bought a bunch of our shares. They deserve to make some money back, and they all get together. Let's say it's a board of members, 10 board of members, right? And let's say, okay, perfect example. Jooviers, you feel me? Let's say the company is Jooviers, right? Let's say we got 10 people on our board of members. We made $1 billion. We only expected to make $25, but we made $1 billion, and then now we're like, okay, we got a bunch of excess money. I kind of want to like give back to my shareholders, kind of give more people incentives to buy our stock. You feel me? So all the board members get together. We got me, and myself. You feel me? All of us together, and I'm like, yo, I think we should give them 1%. Or somebody else, which is also me, says, let's give them 10%. And then another person's like, both of y'all are stupid. Let's just give them 5%. So now we've all of myself has agreed that we're gonna give everybody a 5% yield on their investment. So what that means, right? I said I wouldn't give y'all like big words. Trust me, it's not big. I'm gonna explain it right now. Yield is like 5 letters. It's not big. So the dividend yield is basically the percentage that they're gonna give back to you. So let's say you put in $100. What is 5% of $100, everybody? $5. Okay, so if it's a 5% dividend yield and you put $100 into it, you're gonna get 5% back, just either in cash or part of a stock, or it'll go right back into the stock. Let's say you put $100 into it, you'll get $5, right? Either cash. It really depends how you set it up and which different trading platforms you use, but you're basically at $5 worth of something, right? And dividend yields can be paid out. Some companies do it monthly, some companies do it quarterly, some companies do it annually, yearly they call it. But let's just say, for example, they're doing it monthly, right? So every month, no matter how much money you have invested in there, and if the company still stays in good standing, like Jooviers doesn't crash down and burn and nobody buys Jooviers anymore and they still have money to give out and they're still making a consistent $1 billion, like I said, they're gonna keep doing that 5% every month. So you have $100 in it, right? Every month you get $5 off of your investment, your initial investment of $100, as well as the stock growth going up and down. I'll get into that later on, but I just want to kind of explain what dividend like investing is. It's basically when you invest a certain amount into a company and they pay you a certain percentage off of that company. Dang, I'm making it confusing now, ain't I? I'm gonna get into the real like deep definition in a second. I just want to explain what the heck dividend trading is. It's basically they're paying you a little percentage off of your investment. Okay, you got it? $100, you put $100 into it. They're like, okay, you're a cool guy. I like you. At the end of the year, we're gonna give you 5%. $100, 5% of $100 is what? $5, like I said before. So before I get into like the pros and cons of it and how you can get started in it, there are many different platforms that you can use. You can use Robinhood, you can use Webull, you can use E-Trade, you can use TD Ameritrade. You can use a bunch of different things. I personally right now use Webull, and you guys can actually sign up. First link inside the description. You can sign up. If you deposit $100, you can get up to $1,400 worth of free stocks. So what I would do personally for y'all, ultimate finesse, right? Click the link inside my bio, sign up, deposit $100, get the 2 free stocks, take your $100 out and trade with the 100. Well, you don't have to take your $100 out, but if you didn't want to keep your $100 in there, you could just put your $100 in it, get the 2 free stocks, and whatever it's valued at. Like I said, it could be valued up to $1,400, which is $1,400. $1,400. $1,400 freaking dollars. You feel me? So whatever your stocks are valued at, let's say you get a stock for $50 and a stock for $100. Now you have $150. You can take out the $100 you put in there, so you got your free stock. I'm just showing you how to finesse the game. You feel me? You don't have to do that, but you can if you want to. You feel me? Free game. But like I said, I use Webull personally because I don't like Robinhood really, because they do be robbing the hood. But I'll get into a video explaining that before. But like I said, y'all can click the link inside my description. It's the first link up there. Sign up, deposit $100, get some free stock, you feel me? But like I said, there are multiple different platforms you can use. I was just telling you guys I use Webull. You can use Robinhood if you want. You can use Ameritrade, TD Ameritrade, sorry. You can use a bunch of different things. I can make a video about that if you guys want me to. But for now, we're just gonna pretend we're using Webull, right? Because we're all gonna be using Webull right now. Because I said use Webull, so you're gonna be using Webull, right? Yeah, 2 free stocks. But anyways, now I'm against like pros and cons of it, why I personally think it's good, why it could be bad for some people. Kind of just giving my opinion on it. Yes, I do dividend trading. I should make a video. If y'all want, like the video right now, drop inside the comments down below. Make a video about your top 5 dividend trading stocks, because I really could do that. But there's many different pros of dividend trading. It's a great passive income, which passive income basically means you don't do nothing. It's just money like being brought to you for you really doing the bare minimum work. Another big pro to it, which can be a con as well, but let's go with it's gonna be a pro for now, for an example, right? So let's go back to our Jooviers example. You can technically make money off of the growth of the stock as well as the dividend that it's going to pay you. So in simple terms, Jooviers, you bought it at $100 a share. You bought 1 share, right? You have 1 share of Jooviers for $100. You're gonna make that 5% dividend yield, right? So you're gonna make that $5 automatically. But if Jooviers keeps doing good, let's see Jooviers makes $10 billion next month. The value of your stock is going to go up as well as they're gonna pay the dividend. So let's say the value of the stock goes up another $10. So now the 1 stock you bought of Jooviers now is worth $110. Plus you got that $5 from the dividend yield that they paid you. So now you got $115. So you can make double profits, but you could also see the reverse side where if the stock goes down while you're holding the dividend stock, they'll still pay the 5%, but the stock could have dropped down $10 and you would now have $95 in your portfolio instead of whatever it would be if the stock did not move. But it's a give or take, and that's why you need to invest in the right companies. That's why I said I could make a video about the 5 companies, well, the top 5 that I'm invested in right now for dividend trading, that most of the time on a yearly basis is continually going up, as well as paying good dividend interest on top of it. So let me know if y'all want that video in the comments down below. Another great benefit of dividend trading is it is a very steady source of income. If you guys know who Warren Buffett is, he's really big on dividend trading. If you don't know who Warren Buffett is, I need you to Google him. He's right over there. He's a cool dude. He looks real fly. He's freaking rich. That's all you should care about. But it can be a great source of income. I remember I had sat inside the room with I was in a meeting with somebody, and this financial advisor was going over kind of numbers with this guy that I was in the room with. He asked the dude, hey, how much do you need to survive? Like, how much are your bills on an annual basis, right? So let's say the dude said $10,000. Only got to spend $10,000 to live. That's my rent, that's my food, everything. I only spend $10,000 a year. Now, that's an example. I don't remember the exact number. But he was saying, did you know that you could put $100,000 into a 10% dividend yield stock and never have to work again? Because if you put $100 in with 10% coming out every year, what is that, kids? $10,000. So therefore you could not work again and just make $10,000 or your minimum living amount of money. Just another steady source of income. So like I said, it can be a good steady source of income if you're invested in the right stocks. You feel me? If you're not doing your research, it can be pretty bad. But if you're invested in the right stocks, it could be a great steady source of income, kind of like a salary being paid just every month, every 4 months, every year. It could be a great steady source of passive income where you're literally doing nothing in it. Another great pro of dividend investing is the fact that it can be great for long term. So let's say a stock that you're invested in for dividend trading. Like, this is all based off the fact that you're investing into good stocks. You're not investing into some crap thing that you said, oh, I give you 15% annually, and you think, oh, 50% annually is just freaking great, and there's no downside. Because you're like, oh, if I can make 50% on $100 every month, I'm doing great. but that company is gonna freaking die. You're gonna lose all your money. But it was 50%. But based off of a good stock, it can be a great long-term investment because you're getting that constant dividend trading, as well as the value of the stock is going up while you're holding on to it, and it's paying you dividend money. So you're getting, it's a double whammy. What's that TikTok? Double homicide? Yeah, double homicide. Except you're not killing your bank account, you're feeding it. Yeah. Just to throw out there a great like number, or I believe the average percentage dividend yield is 4.7%. So if you're looking at stocks, let's say you're researching stocks because you don't want to wait for me to put out the video about my 5 top ones. Let's say you start researching some dividend paying stocks, and you're looking at the percentages and you're trying to find a freaking 25% annually dividend payout. It's not gonna happen, I'm telling you right now. But anywhere between like a 3 to like a 7% is great. If you find that, you're hitting the sweet spot, because it's like I said, I believe the average dividend payout is like 4.7%. So dividend trading is a great source of passive income. It's a great extra source of income that you could add to your portfolio without doing much. That's the thing. Like, you're investing, they could be regular stocks. ET gives out dividend yields. I don't want to get into all the ones that give out dividend yields, because then I'm gonna just keep going. But there's a bunch of stocks that a lot of people already have that already pay out dividend yields. They might not be the high 4%, they might be 1% or 2%, but it's another source of passive income that literally you have to do minimum work in, which is great. That's what we all want, more sources of income that we don't have to put 10 hours into. So now that I kind of told you guys the pros, why you should get into it, kind of what it is, I do want to give you guys the cons, like what can be bad about it. Of course, with any investment, like I said, wait, let me pause. Any advice I'm giving is not financial advice. I am not a CPA or a financial advisor. I am your friend. Yeah. But like I said, any investment you're gonna put money into, there will be risks, because, you know, without risk, there is no reward. Didn't they say that in Transformers or something like that? I don't even know. But with every single investment, there will be risks. So I kind of want to break down some of the cons that can be kind of involved with dividend trading. One could be that the stocks do not grow as fast most of the time. So let's say back to our whole Jooviers analogy. Now, you guys know I love cryptocurrency, right? Crypto moves very fast. In a week, it can move 15%. I can make 15% off of my investment on crypto, and that's like regular. Regular stocks, you can make 2% a week, 3%, 5% a week. That's kind of much, but you're in that area, like weekly. With dividend, most stocks do not move that much, which can be good and bad, because that means the stock value cannot drop down as fast. Most of the time it will not, unless like the company becomes racist or kills children or something like that, then the value of it will go all the way down. But I'm saying, like, on a normal basis, most of the time dividend stocks they're not that volatile, so they're not moving 10% every freaking week and 20% down every week and 100% up. That's not the type of thing. This is more of like a passive income. Depending on how much upfront money you have, that's another con. If you don't have a lot of upfront money, dividend trading could seem pretty minuscule to you, or seem like a waste of your time, when it's really not, because like I said, it is passive income. You're technically not doing any work. So say you put $10 into it with 4% interest dividend annually, you only get off that $10, you're only gonna make what, 40% off that $10 annually. But at the same time, sitting inside a bank account, it's not gonna do anything better. You're actually gonna lose money. In the savings account, I think you make less than 1% annually, something like that. So you ain't really making nothing. So dividend investing is still beneficial for anybody, no matter how much money you have. You can start off with $10, $100, $1,000, whatever it is. It's beneficial because it is passive income. You're not sitting in front of a computer for 10 hours studying charts to go try and figure out money. You kind of just put money into it. And while you do this, of course, you got to do the studying up front and make sure you invest into a good company. But then after that, you kind of just let it ride. You feel me? You just collect the money when it's sent to you, or reinvest it back into it. You feel me? Another con that I'll get into, probably the last one, because these are like the main ones that I think about when I'm going into investing into dividends, is that any company with a high percentage dividend yield payout, most of the time it's not sustainable. So like I said before, if you see a company that's offering you $15, or you see a stock that's offering 15% annually, that's not really maintainable for a long period of time, especially as a company grows, or if a company stops growing, it's just not maintainable. 15% is a lot. So that's why I said stick between the range of like 3 to like 7% is always good. Anything over 10% is I personally would not invest into it, even though it might sound good. 10% sounds good, but it's, well, 15% sounds good. You know what would sound great? 100% actually. I might just gotta risk it all. No, I'm just playing, but I kind of explained what dividend trading is, where you can get on it, Webull, first link in the description, sign up, finesse the game. You remember how I told you how to do it? Scroll back and watch, I'll rewatch it, you'll see how to do it. Where you can buy it, where you can start getting on it. I told you I can put y'all onto the 5 top ones that I use right now. That's pretty good. I told you about the pros of it and the cons of it. So, in all honesty, it's up to you to see if you're gonna use these tips to make yourself some money. You feel me? I hope you guys enjoyed the video. Hope you were able to learn something, even if it's just a simple explanation about dividend trading, what it is, dividend investing, how you can get into it, what the different percentages mean for you. Hope you was able to learn something out of it or pique your interest in it. If you want me to put a video out there, my top 5, drop inside the comments down below. Make sure you like the video. Make sure you go on Webull, first link inside the description, and get started with any stocks. You can watch my other stock video to get it, to understand which ETFs you should invest in, which stocks you should invest in. Make sure you watch my other crypto video so you can start making a big bank. I'm see you on the next video.